Trading versus investment activity. A very interesting topic that I'll be discussing in this short video. Is something that comes up on a daily basis for us, because there's always, that question whereby, is a company a trading company, or is it an investment company, or is it a trading group? Is it an investment group? It's important for many reasons, especially due to the fact that trading companies or trading groups enjoy better tax advantages compared to investment activities. Okay, as per legislation, if you think about it, the logic behind it, it makes a lot more sense when it comes to incentivizing growth, the economy, and that kind of thing. Before we go on, don't forget to like, comment, share, and subscribe to our channel. My name is Omar, Chartered Tax Advisor, owner of ASWATAX, a specialist UK and international tax advisory firm. So as I was saying, there are advantages, there are benefits for having trading status versus investment. Very broadly speaking, we have, for example, business asset disposal relief is only available for trading shares in a trading company. We have business property relief, again, only available for shares in a trading company. And you can check out my video around less tax for landlords, where that scheme, they were arguing that property investment activity is a trade. Okay, it doesn't work. Also keep in mind that from April 2026, there will be changes to the legislation, slightly restricting the business property relief available on trading businesses to 1 million. That's covered in other videos, and tax planning opportunities there. Moreover, and I can go on, whereby trading is always superior, you could say. For example, when we have the Substantial Shareholding Exemption for corporation tax, where you can potentially sell the shares, the holding company can sell its shares in a trading subsidiary, completely tax-free. Again, it has to be a trading subsidiary. Company purchase of own shares and other wider and larger transactions. In terms of how it works, you need to think about the 80-20 rule. That's what it comes down to, the 80-20 rule. And we're looking at 3 categories, okay? I'm just thinking this can also help tax advisory or tax students. So when you're looking at ACCA, ACA, ATT, CTA, because I learned this very thoroughly when I was studying for my exams, you're looking at 3 aspects. Number 1 is turnover. Number 2 is the assets on the balance sheet. And number 3 is the time spent / expenses. If investment activity exceeds 20% when it comes to turnover, when it comes to assets on the balance sheet, when it comes to time spent or expenses, then you're pushing into investment activity. Okay, so as long as trading activity exceeds 80%, then you're fine. Effectively, what we're trying to say here is HMRC do allow a certain element or proportion of investment activity to be diluting or mixing with the trading status. But once you start going over 20%, then you'll have a problem. And we undertake a detailed analysis when it comes to looking at trading companies, trading groups, looking at the substantial shareholding exemption quite commonly. We look at, we assess everything, the turnover of each company, the balance sheet, the time spent, and we can provide a formal opinion in terms of whether a company is trading or not. And we also apply for clearance from HMRC so that we have their stamping that a certain company or a certain group is or satisfies the trading status. This is very important because we mentioned, business property relief, business asset disposal relief, all the other angles we mentioned. And I just want to also say that one of these 3, turnover, assets or asset base, and time spent versus expenses, time spent and expenses, it's not conclusive. So it doesn't mean if you go over in the assets on the balance sheet, you have a lot of investment property, then you fail the test. You have to look at it as a whole. So I hope that makes sense. As always, please feel free to reach out. Trading versus investment activity, very important. Turnover, asset base, and time spent and expenses. These are 3 areas that HMRC would look at. You need to be very careful for a multitude of reasons. Don't forget to like, comment, share, and subscribe if you enjoyed this video, and feel free to reach out. My name is Omar at aswatax.co.uk. Speak to you soon. Thank you. Bye.